Most traders fail funded accounts because they either over leverage or they just simply don't understand the funded rules. In this video, I'm going to break down exactly how I approach funded accounts, how I manage my risk, and the exact strategy I use to pass those accounts. Once you understand how to properly manage risk with a proper strategy, passing accounts is honestly a piece of cake, and that's exactly what I'm going to cover in this video. Let's get right into it. Step 1, we're going to be covering the funded account rules. Now, my go-to is Alpha Features just because they are the cheapest in the industry for $0 activation fee. They're honestly just amazing, and I've been working with them for a very long time. So if you do want a discount, I have a pretty fat discount down below, so go check that out. So evaluation, what is evaluation? That's pretty much just proving to the firm that you are actually trustworthy with their capital to then start taking out payouts. So for the evaluation, you have a minimum trading day of 1 day. So you can pass this account in literally 1 day. You have to have a profit target of $3,000 and you cannot hold more than 3 contracts, which is Nasdaq contracts. Looking at MNQ, which is a micro mini, you can have up to 30 contracts, more than enough. Maximum drawdown is $2,000. If you do end up losing $2,000, it's not a problem. You just lose the account essentially. So I guess it is kind of a problem. But you do have a little discount for a reset fee of $79. Profit split, it's an evaluation, so there is no profit split. Daily loss guard, you cannot lose more than $1,000 in a day. If you do, then you just pretty much get locked out for 1 full trading day and you can start trading the next day. Consistency rule is 0%. So that means minimum 1 trading day, $0 consistency percentage. You can pass the account in literally 1 day and you can hold through news, which means full porting CPI. Now, to get a payout, you need to have a minimum of 5 trading days of, I believe it's $200 plus. Very reasonable. Profit target, obviously nothing. And maximum position is 30 contracts on the MNQ. Maximum drawdown is $2,000. But keep in mind, if you build your buffer, this $2,000 can be $5,000. So that's nothing to worry about there either. Profit split is 90%. So 90-10 split. You keep 90%, they keep 10%. And you have a $1,000 loss guard. Again, you do not lose the account. Essentially, if you lose $1,000 in 1 day, you just need to take a chill pill for 24 hours. Not even, for 1 trading session. Consistency is 40%. So whatever your total payout, 40% of that is your total daily profit target. You can have a total of 3 accounts. So this is now part 2, risk management. So honestly, for the strategy I'm going to teach you, it's a 1-to-1 risk to reward. And bro, it has done me so well in the market. I don't need anything more than a 1-to-1. I literally get my piece of the pie for the day and I'm out. It's nice and quick and very high probability that's going to work out. And guys, trust me, the strategy I'm going to show you in the next step, which is going to be step 3, is going to be golden. But staying on the risk management for now, in part 2, when we are looking for trades, this is how much you should be risking. So if you want to risk $800 per trade, you need around 3.4, 3.5 trades to make $3,000. When you're risking $500 per trade, and this is all taking into account the 1-for-1, you need 6 trades to hit that 3,000 mark. If you're risking $300 per trade, you need 10 trades. That is a lot. You need 10 trades to get that 3,000 mark. So guys, honestly, if you want a clean 1-to-1, I would suggest in the evaluation phases to be risking minimum $300. $800, if you are very confident with what you're doing and you want to get straight to that payout phase, then $800 would be the deal because you only need technically 3 to 4 trades. If you want to take it more conservative and more like less on risk, $500, get 6 trades, that's $3K, you pass the account. That's usually my go-to. If you're not really sure what you're doing yet, then you want to play it safe and play it calm, $300, 10 trades, you get that 3,000 mark. So this is honestly a little bracket of the highest you should go to the lowest you should go. But my go-to is usually $500 per trade. 6 trades, you pass the account and you're getting ready for that payout. So now this is step 3. This is the final step and this is the most important. So having the right strategy to trade. So for example, right over here, what do we see? First thing I want to analyze is the bias. What are we doing today? Are we looking bullish? Are we looking bearish? How can you figure that out? Well, first thing coming to mind is looking at these charts. What do we see? We see an obvious sell side liquidity got swept. What happens when sell side liquidity gets swept? We start having a continuation higher. Okay, we're going to have a continuation higher. Do we have any draws higher? Yes, we have currently all-time highs right above. And what is all-time highs? It is a magnet. Guys, I repeat, it is a magnet on liquidity. Not only that, we also have this high, which is very close to this one. What does it mean? Relative equals. Beautiful. Let's come down to the hourly time frame and look at that. Relative equals, and we also have other stack ties up here that we're getting taken. So we come down to a lower time frame. We look for a fair value gap. Right over here, we see a fair value gap is getting respected. Guys, when we are wicking fair value gaps, it is so powerful, man. Very powerful. Now, make sure that we are at discount of a range, because you never want to be taking a fair value gap and a premium. You always want to take fair value gaps and a discount. That is why this fair value gap got respected and this one over here didn't. So fair value gap and a discount, make sure it is there. Once that is confirmed, then we drop down to a lower time frame and we look for an inversion fair value gap. Once the IFVG has been created, then honestly, it's really as simple as that. You just take that entry, stop loss at the lows, and you aim for that 1-to-1 that I was aiming before. And guys, honestly, as easy as that. But while we wait for this to play out, there we go. Are we even going to take those relative equals? Of course we will. So that is literally the model. Look for a fair value gap in the market. Number one, make sure you're at discount of the range. Number two, come down to a lower time frame. Look for that IFVG. Beautiful. And you take the entry. Doesn't get any easier than that, right? So that is the 3-step model on how to pass a funded account and get that payout. So guys, if you did like this video, leave a like, subscribe, let me know in the comments what you think. And if you do end up wanting to trade with Alpha Futures, I have a link down below. Go check them out. They have a very nice special going on right now. So I hope you guys enjoy the video and hope you have a beautiful rest of your day. Peace.